Okay, so we have looked at the, we have looked at filing. Now we're interested in the actual profits and when we actually, um, how much we pay and when we pay them. So what's important here is what's referred to as the augmented profits. Remember when I was teaching some time ago, I highlighted that we didn't re-tax dividends because technically before the dividends come to us, they've been taxed. So in effect, we don't tax them again, never. But so this is dividends from non-group companies. We never um, tax them again, but we, in effect, what we need to do is we need to include these dividends, if you like, within our sort of measurement to see whether or not we're within the band or whether we're a large company or not to determine whether we will really to depend on when we pay tax ultimately. So this question of being a member of a group, it says here a non-group, and so for to be member of a group, um, if you like, again, like I say, we include dividends from non-group companies. That's certain. That's kind of that comes into play, and but of course, again, non-group. So again, this is important. This the definition of non-group. So non-group overseas. So they're not part of our group. So the group means that we control at least, well, more than 50% of the company involved. So you can have a company that where we have a 20% stake in effect, and so this, if you like, is not really part of our group. This is, if you like, in effect, what's referred to as an associate, if you like. So, in terms of dividends that we have received, so in terms of dividends we've received from non-group companies, they come into this calculation of um, augmented profits. Dividends from our group company are really our own profits in effect, so we can't really be taxing ourselves twice in effect. That's what's really the issue. They are external. So overseas, less than, if you like, 50% are external to us. So we include them in this augmented profits calculation. Right, so let's sort of see what's happening here. So it says here we have the Mango makes up accounts to the 31st of March each year. So they have a TTP here of 500,000 and they receive dividends from a 20% subsidiary. So a 20% subsidiary, this is almost in effect, if you like, an external company or entirely different business. So that, in effect, that 20% subsidiary will go in. It's almost like it's a foreign company. And dividends from a wholly owned subsidiary. So this is really like within ourselves. So no, we're not interested in wholly owned subsidiaries because this is internal, really, in effect. Um, so so what do we have? So that's the we then calculate, therefore that becomes our augmented profits, and that's the basis on which we determine, if you like, what band we're in effect. But this is the initial um, sort of analysis. So include all overseas and less than 50% as part of trying to work out the augmented, and exclude any sort of companies we actually control. Right, right, okay. Right, and then in terms of dates, now also, again, like I say, this is why this really does matter. But again, this is really tax evolving. Once upon a time, the rates were very different depending on what band you were in, but everything is kind of coming towards the same central um, sort of 19%. It's very standard now. So so typically, the threshold again is 1.5 million. This is important. 1.5 million for a 12-month chargeable accounting period. These two go together. It's 12-month chargeable accounting period. So because we can't have more than a greater than 12-month chargeable accounting period, we don't have to worry about that. We only need to consider what happens if it's less than 12 months. And here's the issue. If augmented profits exceed the threshold, then the company is large for corporation tax purposes, and therefore taxes due in installments. So you can see where I was going. This is the real issue. And if it is not large, what is more popular to many more smaller companies, taxes due 9 months and 1 day post the end of the chargeable accounting period. taxes paid electronically. And so yes, that's the first thing. In terms of defining this threshold, what we need to do, a number of little rules that you will hopefully come to see. Um, for tax purposes, we need to find out how many associated companies we have. So how many related 51 groups, 51 group companies are involved here. It must be greater than 50, or which is 51%. And there you are. And or it might be, if you like, twice over. So it might be whatever A to B to C. So if you like, so you might have AT and AT. So in effect, you have this is C is an associated company because it is greater than 50, 50, 51, 51% group. 51% group greater than 50% typically, and in terms, so it's really about control. It's really about control, right? The other little thing to pick up on, oops, sorry, the other little thing to pick up on before we do a question is this little thing here. It's really about what happened just before in determining the number of 51% related group companies. We include overseas companies and we exclude dormant companies, right? This is important. Remember, we excluded overseas when it came to sharing, surrendering, um, surrendering losses and that sort of thing. But in terms of determining the 51% related, we include overseas. So what would, and how it pretty much it's based on this. The number of 51% is counted at the end. So we get to the end of the group and we literally ask who was with us at this point. So even though someone's left us post that year end, we still include them in calculating whether they were part of the 51% associated group companies. And but you must have been with us. So if now you join us in this current period, well, not yet. We're not including you. We'll include you in the next period. So and so let's see an example. Hopefully, I think yes, I think we see something. Oops, right, and that's it. But let's see. Okay, let's see this one. Oops, sorry. Example 3. Here we are. So we have W Limited. So first of all, we can see this is 40%. So no, you're not really part of our association in terms of trying to work out whether or not we're going to have to split this 1.5 million to see if you're a large company, because we will split the 1.5 million based on the number of companies in the group. So we have an 80% yes, 100%. That gives me, I will think about that. But Z Limited is dormant. You can see here it says Z Limited is dormant. So this excludes Ed because it's dormant. 100% yes, I'm thinking Y Limited, resident trading companies are resident UK. All the companies are UK resident, except for Y Limited, which is resident outside the UK. Doesn't matter. Doesn't matter if it's overseas. That's fine. That's counted. And so what we see, yeah, this is X Limited. Was brought in partway through the year. So yes, you joined us this year, but you weren't with us in the previous year. So you are not accountable. We won't accept X, if you like, um, in the year that we're dealing with. We will only consider X in the next when we now get to the end of the year itself. But for last year's, we won't include X. Right. So but it was disqualified anyway because it was less than 40%. So for tax purposes, only W and Y are related. Z goes out because it's dormant, X because it joined us during the year, and so we can't. So you can see here, coming back here, joiners we exclude, right, and we include them in the next period. Good. So the answer here is W and Y. And just coming up to the 10-minute mark, I think I can do this as one as well. So what are we talking about here? So epsilon is related to gamma, and epsilon is also related to delta. So we have 3 companies here because 80% times 75%, and I'm sure without even doing it, is greater than 51%. So definitely all 3. So whatever, I'll take the 1.5 million, divide by 3. So the threshold becomes 500,000, and that's what I work with. Cool, great. And yes, that's what we'll do, and I'll finish that. Actually, I'll stop here. So divide the profit thresholds by the number of 51 group companies, and then divide the dividends from that are excluded. Of course, dividends are excluded from the augmented profits. We already recognize that. Okay, great stuff. See you in the next video.